In this episode of the Encrypted Economy, I had Travis Schwab, the CEO of Eventus Systems, as my guest. We talked about a number of things: his startup journey, the road to institutional adoption of his market surveillance platform for equities and options and futures, and how it grew into the digital asset space. Then we also talked a little bit about, with that growth and with the rapid adoption by some institutional players, the potential impact it has on the ability to surveil for the market as a whole. I was stunned to learn that Eventus had so many large institutional clients in the digital asset trading space that it could command a substantial portion of market surveillance in, let's say, the Bitcoin ETF. This has really interesting implications for Bitcoin ETF approval, as one of the major stumbling blocks for the SEC has been the ability to ensure market surveillance for any Bitcoin ETF that was approved. So maybe, just maybe, with this, my third interview with the Encrypted Economy, perhaps we're breaking a little bit of news. Or at least humor me just a little bit. I hope you enjoy this episode as much as I did. And if you like this podcast, please don't forget to subscribe, to review, and to, of course, give me feedback. Welcome to the Encrypted Economy, where we look at the business of, regulation, and security for all things encrypted, digital assets, blockchain technology, privacy, and smart contracts. Hope you'll join us while we explore these forces that are shaping the economy. I'm really excited to welcome Travis Schwab, CEO of Eventus Systems, to the podcast today. Travis, you and I go way back to the time when you were at RGM, an investor in Direct Edge, and I was general counsel. We've kept in touch over the years. We basically tried to start up ventures around the same time. It's been exciting to see you grow from a startup to having increasing institutional adoption on the traditional equities markets, and now penetrating the digital asset space for institutional trading. Given your trajectory, it seems like you'll continue to do so, and that's very exciting. There's a lot going on over at Eventus Systems, and I'm really looking forward to speaking to you today.
I really appreciate it, Eric. Obviously, it's always nice to talk to friends and smart people in the business, and I really, really appreciate the opportunity to talk to you today. So great to be here.
Great to have you. Maybe you could start off by giving us your background over at RGM, how it led into Eventus, and your startup journey.
RGM was a quantitative proprietary trading firm, and I ran the broker-dealer RGM Securities for a number of years. It was big, as you know. We were a material player definitely in the U.S. equity marketplace, global futures at one point. But RGM was going through a transition period. And so there was an opportunity to do something different. And I had spoken to kind of the founders of RGM, and we decided it was the summer of 2014 that now was as good a time as any. And it was very supported by those founders. I went to about a dozen people at RGM and said, I'm forming a spinoff. I don't know what we're going to do. We're going to get some IP. We're either going to buy or license IP from RGM. There's lots of ways we can go, but come with me. Do you want to come with me? Got about a dozen followers in this process, and fairly soon we sat in a room and tried to figure out what the hell we were going to do. And for me, you think about 2014 and that time period and what had transpired from the financial crisis, from the flash crash, and then you had a massive regulatory focus happening, especially within the proprietary trading space. And so the bullseye on my behind and on RGM Securities behind was red hot. And so I knew that there was an opportunity for us to try to address that, because I'd gone out into the marketplace multiple times, trying to find ways to see if we're doing the right things, like internally, like the way we do risk management, the way we do surveillance, the way we do reconciliation. And the regulators don't really provide you that information. They don't give you, hey, you're doing a great job, or hey, you should be doing this. The regulators say you're doing this wrong. Don't do that again. And so you find feedback from various industry sources. And so I knew that there was an opportunity. There was a hole in the market for doing risk differently around the act of trading. And so I already had a vision of Validus, which is our product, in my head. And I'd drawn it on a whiteboard. And I thought, okay, if we could build this, this is unique. This doesn't exist in the marketplace today. And this is an opportunity. So then that idea started to germinate. We started mocking up that product and trying to figure out. And so that was kind of the fall of 2014. And Jeff Bell, who ran technology and clearing at Wedbush, a clearing firm in the equity market space, had left Wedbush, had moved to Austin, and I had heard that. And so Jeff and I worked really close together when RGM was a client of Wedbush's. And I called him as soon as I heard that he was in Austin, probably in January of 2015 or even right before that, and said, I need you. I couldn't find a better potential partner to help me build this business. And so he started as a consultant for the first month or two, and then we signed him officially when we launched in March of 2015, and the rest is history. So we wouldn't be anywhere that we would be without Jeff joining. And we have such a good partnership, very much at the beginning, because he really looked inward and I looked externally, right? I focus on money raising, I focus on sales, Jeff focused on the product, on the team, HR, and up to this day, it's still, effectively continues like that. Now, thankfully, we have a lot more resources to where we don't have to do all these different roles together, but really, I couldn't have found a better partner to work with.
So we stayed in touch over the years throughout your journey, and I know there weren't always times where you were sure that this thing was going to work. What was the inflection point? At what point did you feel like, hey, I think this thing's actually going to work?
Yeah, I still don't know if it's going to work. I love being paranoid about it. But for me, I don't know if it was one single event that was the inflection point. You figure we had no paying customers in 2015, right? We're trying to sell this. We're trying to sell something very much kind of a minimum viable product. And we got some traction. Finally, we ended 2016 with 3 paying clients. And one of those clients was UBS. And so the fact that a startup was able to get UBS was a big deal. So that was the first notch in our belt that started to give us some relevance. And that, I think about, really, it's about relevance and people trusting that we're going to be around. We had RGM was a client back then, and then PDQ, which became Coda Markets, were clients back there. And we couldn't have found a better group of early clients. They were just super supportive. They helped us build this product. They were patient with us. And so that started some traction, but it was still lean, very, very lean. So if you think 2016, we had 3 clients. We've effectively doubled then the number of clients and revenue every year since then. And so that's what we've been trying to do. And so it's plotting. It's not some meteoric rise. It's just this continually nice upward curve to the right. I think there's some other critical junction points. One, our board. When we were able to create a board at the size that we were at the time, where we were able to bring in Keith Ross, kind of an early founder at GetGo and starter at PDQ. We brought in Kim Taylor, number 2 in charge at the CME, and then Fred Hatfield, former CFTC commissioner. He was chief of staff to Senator John Breaux. So you have this amazing group of very talented people that I was somehow able to convince, along with Richard Gorlick, to be on the board. And that was another really strong signal to the marketplace that people believed in what we were doing. And then I think finally our Series A, which closed the end of this year, or the beginning of February, was that final notch to where people aren't concerned about our financial structure. We've been around now for years. We now have 60 clients globally. We continually show that we are a real material player in this business. We have staff now. Before, we would have to exaggerate very gently the number of people because people didn't feel comfortable with how many people we were doing things with. And so, one of the first questions, especially bigger institutions give you, is how many people are there? Well, we always had it as a badge of honor that we were able to do so much with so little. Well, that's not necessarily viewed the same way by players. But now we're 40 people and we have the resources to do whatever we need to do globally. So I think there's just those little incremental steps, not little for us, but incremental steps that have happened along the way that give us much more firm foundation that we have going today.
I always love hearing people's startup journeys, and yours is particularly interesting given that I was a traveler at points. You have quite the breadth of asset classes that you're covering at Eventus. What are they?
Yeah, I mean, we are covering global equities, global equity options, global futures, digital assets. We have now some fixed income surveillance happening within the platform, and we have some FX surveillance happening within the platform. So really any of the big asset classes we're covering on a global basis.
What's your product offering across those classes?
Primarily, our product is used for three use cases. So one is trade surveillance. By far, that's our dominant usage within our client base. And that's trade surveillance across the entire spectrum. So a lot of folks focus on market manipulation. That's one area of surveilling for trades. But really, we handle any and all types of trade surveillance that any type of firm may have to do as part of their regulatory requirements or want to do as part of best practices. And so whether that's order marking in the US equities or what CTI code you're using in futures or wash trading in digital assets, we really cover hundreds of procedures and types of surveillance that you can do across all of those asset classes. The second use case or app that we use is market risk. There's lots of technologies out there that on the pre-trade side of things before the trade enters the marketplace. We are the post-trade, the belt and suspenders, if you will. And so, as well as I do, there's regulatory obligations for pre-trade requirements. Regulators also want to see, and best practices, necessitate post-trade. Are my pre-trade limits working correctly? And that's what we do really well. And so use cases, a broker has 10 different platforms that they're using to allow clients to access the marketplace. They set pre-trade limits normally per platform. We give them a macro view across their entire organization that says, okay, these are your limits that you're using from a firm wide, and then you can drill into as much as you want to drill into. And so that's the second use case. And then third, AML. So we do have a emerging product within the AML space along transaction monitoring, primarily for our APAC clients and some of our digital asset clients. In the US, you don't have the same parts of the organization doing these functions. For instance, the AML is done outside of surveillance and governance group. In APAC and within the digital asset space, they combine a lot of those offerings. We've had to offer that product as we've have grown into some of these other geographic and asset classes.
I read the press release on BitMex, certainly a digital asset exchange that's had its share of regulatory issues, has signed a contract with you to receive both trading surveillance and AML from you, which I think a lot of people noted that because they're very much in the limelight now for their regulatory issues. So it speaks to the strength of Eventus' platform that they chose you. Can you tell us a little bit about how Eventus grew to expand into the digital asset space, coming out of a more traditional equities, options, futures environment?
Yeah, we've built out a really strong presence in the digital asset exchange place. We probably have the biggest trade surveillance business in that space across kind of the household digital asset exchanges. And so we are absolutely a place where these firms are coming because we've been in it now almost 3 years. We had the good fortune of working with a firm that is a household name, a very large digital asset exchange that is not public, but they've really helped us grow this product in a really material way. And they're just a phenomenal referenceable customer. And because we've now been working with them for years, that information has spread throughout the digital asset space. And so BitMex is one of the more recent clients that we've signed there. And they're going to use the apps that I was just talking about. So real-time trade surveillance. We now have a deep bench of procedures and experience in this space that they're going to be able to utilize. And they're going to use our AML app as well to help enhance their infrastructure. I love watching the digital asset market structure unfold before our eyes. It is very unique, I think, to be in a period of history where you're watching a brand new asset class be created and adopted. And so we are a core part of that infrastructure that's emerging. We're really excited to work with BitMex. We have a close to double-digit clients in the digital asset exchange space that use us for these functions. And so we're well positioned to capture the lion's share of that market going forward.
Yeah, I think that might have been one of the things that really drove us together initially when I was at Direct Edge writing comment letters, and you were always active in sharing your views. I guess we're just a couple of geeks, and this really gives us a chance to watch it all unfold all over again. And it's exciting that you're at the helm of an organization that's becoming a part of the infrastructure of that. How about talking a little bit about the unique aspects of dealing with the digital asset space from a RegTech perspective? How have you adapted to some of the differences?
There's just some pragmatic challenges working in the digital asset space. They run 24/7. That didn't happen really in other asset classes. And so just understanding that capability, and when you cut a day and there is no downtime, right? So how you orchestrate that operationally took some time for us to figure out. The number of digits, right? So you could have 8 digits, to the right of the decimal if you're trading in Satoshis. We have billion message clients running on Validus in real time for the surveillance because it's the number of messages, and especially with the increase in especially Bitcoin's price, that just volume volatility, liquidity begets liquidity. And so you have more and more people trading. So you have huge volume spikes that are happening in these venues that we need to be able to handle. And so being able to scale to these volume spikes has been a great engineering challenge. So you have those kind of pragmatic considerations. And then it's a question of how we are utilizing our infrastructure. We started in US equities because that's the most prescriptive regulatory regime on the planet. Everything in my mind when we started is if we get US equities right, everything really is then taking it away. Every other asset class is stripping pieces out. So that's where we've spent our time then, is for digital assets, what rules are applicable? And there is regulatory gray areas. For the OTC side of things, what are you doing if you're trading futures? Are you a CFTC member? How do you blend those worlds? Do you go to the most restrictive, common denominator across those two venues, or how do you balance that? So we really sit down with our clients, and now that we've taken some of these exchanges through the DCM, DCO process at the CFTC, we've sat in the examination processes with these firms to help them walk through their surveillance, how they're doing it. So we have on the ground, real-time experience helping these clients build out their surveillance programs. And so that's been an interesting opportunity for us. And it's really, again, helped us create a very unique offering to clients that are, or prospects that are interested in signing up for us going forward, because we have very unique experiences that we can lever up and help them out. So back to the original question, it changes all the time. A lot of where the digital asset exchanges are spending time is market manipulation, wash trades, right? Wash trading is commonly thought of as a real issue within the digital asset space. So how do we reduce wash trades? How do we monitor for them? How do we really bubble up the most interesting data or alerts that we need to look at? That's how we spend a ton of time with these clients, making sure that they have a good solution for that.
In many ways, it sounds a lot like the traditional equity options futures market surveillance problems. And that's why having a traditional platform and adapting it to digital asset space probably makes a ton of sense for institutions, certainly what the SEC and CFTC would expect. What is Eventus doing that differentiates itself in terms of how it's surveilling digital asset exchanges in these marketplaces?
The amounts of alerts that these firms are dealing with is pretty unique. And we've taken a a different approach than a lot of vendors in this space. There continues to be a big trend about reducing false positives. So, really narrowing down the number of alerts that are generated. We take an absolute opposite view of that. We think you should cast a really wide net and open up your alerts because there's information there. Then what you do is you use modern technologies, you use automation. There's robotic process automation, RPA, use machine learning. You pull information from all of those, that net that you're casting, to distill down and also train the system to look for interesting pearls of wisdom. These venues might have 30,000 alerts a day because they're casting such a wide net. They're really looking at all of the data that they can. Well, we can use our platform to distill that 30,000 alerts into 30. And those 30 are really interesting for them. We've had a lot of innovation in that space, in the automation side, in the machine learning side of things, is to help these firms really glean information by casting that wide net and then dealing with the most actionable alerts. That's definitely different from the way the equity markets work. The equity markets really are focused on like Reg NMS or Reg Show types alerts. These are very discrete alerts. They want to make sure you're showing me the ones that are really at issue, as compared to the digital asset clients trying to understand their universe a little bit better and the types of activities that are going on. And that's why we think that casting the wide net is so important. And so I think that's a pretty interesting difference between those two worlds that we're continuing to help each side explore.
Certainly, these are bigger issues that institutional firms need to think about, given the examinations and all the different ways that they intersect with the regulators. Probably less so with the more decentralized retail-type markets. Travis, do you think we're evolving into a bifurcated market or bifurcated markets where one market is centralized and the other is more decentralized, or do you think that we're going to move toward a more of a hybrid approach over time?
The asset class itself was created to decentralize the entire financial infrastructure, but the only way institutional investors en masse will feel comfortable with it is if it has the institutional infrastructure that exists in other asset classes. And so you have this, chicken or the egg issue. People say there's this institutional adoption. It's not there yet. You have hedge funds there, but it's not like you have CalPERS or CalSTRS putting a bunch of money in digital assets yet, because they have their public boards that they have to answer to. And until those safeguards are there to where they can really feel comfortable saying, yes, we know what our wallet address is. It's not going to be stolen, or this exchange isn't going to go belly up overnight, or these assets aren't being used for criminal activities. You're just not going to get that institutional adoption until you have pretty close to the same infrastructure that has been around for these other asset classes. And so I think the way we see the world is you're going to have a bunch of venues and marketplaces that are just going to cater to the retail marketplace, and it is what it is. But then the institutional marketplace are going to adopt more of the infrastructure that we're a part of.
Shifting gears to Bitcoin ETFs. Now, this has been something that the SEC has continued to reject applications to. As recently as February, IZARCA tried to list the United States Bitcoin and Treasury Investment Trust and was rejected on the grounds that it does not sufficiently prevent fraudulent and manipulative acts and prices or protect investors in the public interest. So in the rejection, one of the key things that the SEC seems to focus on is the lack of a surveillance sharing agreement with the listing exchange. And the SEC's logic goes something like this. If someone's seeking to manipulate a security, they'd have to do it on a market exchange. The trading on the exchange would be the predominant determinant of prices in the market, and so the exchange needs to be able to detect and deter misconduct. Now, interestingly, this seems to be where Eventus could come in as it starts to really build its market share, particularly among the institutional digital asset exchanges. What do you think of that? Do you think Eventus could play a role in convincing the SEC that the exchanges can properly surveil across the marketplaces for that manipulation? I mean, certainly the issue's a little bit bigger because they're really looking for an SRO to enforce those standards. But by the same token, any SRO or any regulatory structure would need to have a substantial portion of the order activity in the market and the execution activity. And to the extent that a firm like Eventus is effectively aggregating all those orders and trades, now you start to have a fuller picture of the market and perhaps could facilitate a better outcome, and one that the SEC would feel more comfortable with if an SRO or some other regulatory body was behind it and enforcing those standards.
Yeah, I think you're right. The question Clayton has said multiple times when they rejected Bitcoin ETF is because they're worried about market manipulation. So if we can go as an industry to, I doubt it's going to be Clayton now, but whomever is going to be that role next year, I think there is an opportunity for us to come to the table with a newer situation to where you have real adoption. It's not there yet, but it's getting close to where over the next quarter or two, you'll have the bulk of the major players in this space that have adopted something on the trade surveillance space. And so then you also have another effort going on across industry organizations. So whether that's the Virtual Commodities Association that's considering being an SRO, you have other organizations in this space, and ATOM and the Digital Chamber of Commerce. All of these organizations are working to educate and potentially offer more safety and transparency in how these organizations are being surveilled and monitored. And so I think all of those efforts are going to culminate to where we can sit down as a group, say, okay, this is what's happening. The markets are being surveilled. Wash trading and manipulation is dramatically reduced to where it's an afterthought or corner cases as compared to potentially a common occurrence. And it's not like manipulation doesn't happen in the other asset classes, right? Every single day on our platform, we see evidence of spoofing and layering and market manipulation across all the asset classes. So you're never going to eradicate manipulation in the digital asset space, but you can absolutely come to them with a concept that says the markets are being surveilled, actions are being taken, bad actors are being removed, and we now have a marketplace that is ready for the next step, and whether ETF is potentially one of those. So I think we're really close to that inflection point over the next couple quarters.
So Travis, given all that, is Eventus trying to work with other key players in the space to educate the SEC and shape the outcomes to the point where the industry is in a better position to have Bitcoin ETFs approved?
Yes, absolutely. We think because of our client base, because of our work with regulators up to this point, we've sat down, gone through the examination processes and the approval processes. People know who we are. They're comfortable with our technology. We have an opportunity as a leader in this marketplace to take a leadership role, and we will do so.
So how does Eventus keep up with the market in the digital asset space and determine where to focus its efforts on and what steps to take, even with DC, is in trying to shape the outcomes?
We grapple with the sheer amount of innovation and organizations in the digital asset space. We're leveraging Delta Strategies Group out of DC. We work with the VCA. We work with ATOM very closely. We're working with the Digital Chamber of Commerce. There are other think tanks, other websites that we go to all the time. We're trying to find and work with every source that we can, but also not try to stretch ourselves. We have to keep our focus somewhat narrow, and just the fact that you can't do everything. And so we really want to be the best in trade surveillance and market risk in the digital asset space and keep expanding into other areas like AML. But for us, we're keeping the blinders on. So if we can be really good at that and find those sources that work well and understand that space really well, because the ecosystem is different, right? The firms that are focused on DeFi are not the same firms that are focused on exchange traded activities, or the firms that are focused on different aspects of the decentralization process. They're not interested in finding or building out the ecosystem, the infrastructure that the institutions are potentially needed in. So there's definitely a bifurcation within the space itself. And so we are obviously more on the institutionalization of this space as compared to the decentralization and all the different applications that blockchain and some of these digital assets are looking at.
I agree. You certainly can't be all things to all players. Now, Eventus is playing a really unique role in all of this, isn't it? It's bringing on the big clients. It's aggregating a lot of that flow from a market surveillance perspective. Do you think that all this puts Eventus in a truly unique spot in terms of its ability to help the overall surveillance of the digital asset market space?
Yeah, I think it does. There are benefits to being big and to having a macro view of activity. We are quickly becoming that within a very narrow space of the digital asset marketplace. And so, yes, that success is going to give us a really distinct advantage going forward for every new prospect because of the history that we've had, because of the actionable intelligence that we're getting working with our clients in partnership. There really is a lot of benefit that the marketplace gets out of that.
Well, it all sounds really exciting, and I can't wait to see where you go in this marketplace. I see good things ahead. For the listeners, if they want to learn more about Eventus, where can they go?
Yeah, our website is eventussystems.com, EVENTUS systems.com. You can email me, Travis at eventussystems.com or info@eventussystems.com. We'd love to talk to you about digital assets or any other asset class and what you're doing on the trade surveillance side. So happy to chat and share stories. I really appreciate the opportunity to talk to you, Eric.
That was great. I learned so much. Appreciate having you on the show. We would have never had this conversation but for the podcast.